Hi, welcome to the market view for Tuesday, the 19th of August 2014. Just before we get started, a few housekeeping issues. First and foremost, the Dow trading strategy is virtually complete, and the good news is you will have it by Friday, complete with the settings and everything that you will need to change in your existing software. It's a brand new product. It's a free upgrade to those of you that have the TUFXP Next Gen, i.e. the one that has the market view that you watch each morning attached to it. So this will be available to you on Friday with the full set of results, plus the settings that you will need to just change and create in your existing software. So Friday it will be available for you, which is a month ahead as before it goes to market as well. The results so far are excellent, apart from last week, a pretty poor week, but they come and they go, as you know. But the good news is, unlike the British pound that is seems to be trading in a sideways range and going absolutely nowhere at the moment, the Dow has a lot of activity, which you'll see in just a moment, of course, when we look at the Dow in the market view. So that's the good news. And the second, it appears that Carney has once again backtracked on what he was saying with regards to wage inflation last week, and in a Times article at the weekend has suggested that interest rates will have to go up sooner than expected. And also in the Daily Telegraph, which I'll just get hold of a copy for you, just one second. So here in the Telegraph you can see confused Carney, interest rate intentions. So it's a case of he doesn't know whether it's Christmas or Easter in its basic and simple terms, and often being criticised for criticising the bank governor, but it looks like I've been vindicated because he's absolutely clueless and doesn't know what to do with regards to the economy. 1 minute we've got asset bubbles, then we haven't, and then it's wage inflation, then it's forward guidance and something else that he can come up with, any other euphemism for I don't want to put interest rates up. But it looks like he's being forced now behind the scenes to actually make a stand and put interest rates up. So we could see an increase sooner than expected. And as this article says, it's just a brief one about his U-turn on interest rates and whatever. So it looks like the former Goldman boy is pretty clueless when it comes to running the Bank of England. So I thought I'd just mention this. So the next time I have a rant about him, it will be perfectly legitimate in my opinion, because it's not just me. Even the mainstream media now saying confused by Carney's interest rate intentions. So is he. Well, that says it all, really. Right, let's move on. Have a look at this morning's markets and see what's happening. Well, the British pound not a fat loss. We can see that yesterday that the market was traded a full range of, wait for it, drum roll, 24 pips for the pound yesterday. It's probably just a bit more, about 26 if we were to go from this point. I'll just draw that again, from there down to there. So yeah, 26 points. So a very quiet, boring day. 3 potential signals, not one of them filled, which is fine by me. I'd rather have an unfilled signal than a losing signal. And that was the case for yesterday. In the 60-minute, just one signal unfilled as well. 26-point range in this as well. In the daily charts, it's becoming a bit of a mess, really. If we have a look down here, we can see where we got some support last week, and then the market's gapped up, and then there's absolutely nothing on today's trading. If I just switch back to the 30-minute, let's just measure the range of this. It's probably about 5 or 6 pips. That's probably about the high there. We're at 9 pips. That's all there is in the trading range for this morning for the pound. So again, very quiet, which is why you can see this, what is basically a small horizontal line on the chart. So let me just remove these again. I actually removed these yesterday and obviously didn't save the chart, which is why they've reappeared. So let me just save the chart this time. So again, you can see the market, very narrow range for yesterday and also so far today. Any news to move the market this morning? We've got CPI at 9:30, so this one could be interesting. It's forecast to actually drop, which will suit Carney, of course, to take the pressure. Oh no, we're not looking at inflation anymore. That was last year's. That's old news. We don't use inflation anymore to decide when to put interest rates up. We're now on wage inflation, of course. So we've got RPI for the UK and CPI, and also for the US at 132. Building permits out in the US as well, so we could get a bit of activity around 9:30 and 1:30 this afternoon as well. The 9:30 CPI generally is one that I would say stay out of the market, and as the markets are being so quiet, I would suggest we do the same as well, just in case it is sparked to or used to spark some sort of a decent move that we haven't had for some time. We can always get on board later, but just in case it's in the wrong direction. What I mean by that is that it comes out better than forecast and the market moves lower, or if it comes out higher than forecast, interest rates will have to go up and the market will go up. So I say just stand aside on that one this morning. And also lunchtime, be careful with the US one as well, although the US one is only to show a 0.2%. Talk about fiddled. These figures are just breathtaking. How can you have 0.1% when food prices are increasing by 20% a year? It's an absolute joke and nonsense, and everybody knows this apart from those in government for some unknown reason. They obviously are clueless as to what the price of goods are. So that's the news in the Dow. You can see yesterday a nice move there, 175 points to the upside. Great trade yesterday, 80 points in the Dow for yesterday's move. Buy signals from the off and the market moving to the all the way to the end of the trading session, actually. So a very good day as far as the Dow is concerned. The market trading up towards this high, which is where we had the sell-off. You can see the market retracing back. Watch out at the 16,869 level, just in case there's some resistance there. So that's where there will be some through this 76%. And let's have a look for the next upside, 76, which will be from here to here, and we're just through that one, so we can remove this one, and then we'll just roll back to this high and this low. So now you can see that the 76% area is very close to the high of this selling bar as well. The implied volatility has dropped, as I said in the market view the week before last. If we drop below a 50% retracement in the implied volatility, the down move is over, and it would appear to be the case at the moment. We dropped from 10.39, I think it was yesterday, down to 9.03, and you can see that in the price chart there where the market's heading back down. Watch out for the 7.9 implied. That's the all-time low, never mind the yearly low. It's 3rd of July, over a month and a half ago now that this low was made, but it looks like the implied volatility is heading back down towards this figure. Right, well, that's it from me for this morning. All things being equal, see you in tomorrow's market view. Have a great day. And like I say, Friday, keep an eye out, an email from me with details of what to do in order to start trading the Dow from Monday next. I will see you tomorrow. As ever, thanks for your support, and thanks for watching.